here is the primer, again, enacted in 2017, a not so well known piece of legislation. Again, we consider it the most compelling tax efficient vehicle one could consider. And it provides you three significant benefits by investing a capital gain. So in the macro, I think Treasury and Congress wanted to unlock passive gains in the stock market and provide an incentive to reallocate that capital into these designated zones, these opportunity zones, which there are 8,700 of. Those 8,700 zones were defined by unemployment and income projections, and they were offered to the governor of each state, and then the governor then would submit to Treasury for approval. That occurred, and that was largely based on 2010 census data. So what you're going to hear in my description is a bit of an arbitrage, because in 2010, obviously 13, 14 years ago, these markets looked very different. But yet those zones were defined on that data. And what we found is that there's an opportunity to invest in these zones, very attractive markets already emerging, and we're being incentivized to invest and in our case, develop multifamily. So it couldn't be a more opportune scenario. So in exchange for investing capital gains, short or long term, from any source, not just real estate, but equities, art and collectibles, even Bitcoin, anything that the IRS designates as a realized capital gain qualifies to be invested in an opportunity zone and to obtain these three benefits. The first is deferral of the tax on the gain. So that is the equivalent of that interest-free loan from the IRS to invest, instead of paying and writing a check to the IRS, invest that tax and your gain into the fund to create basis in a real estate investment. So you get deferral of your tax. So simple math, you generate $1 million gain, you're obligated to pay, depending upon short or long term, either $238,000 or $390,000 to the IRS. Instead, keep that money as the tax is deferred through April 15th of 2027.